Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome to the last edition of the Forex Morning Mastery for this week. Your daily dose of financial insights and trading strategies. I'm so excited to be with you here this morning as we are going to be taking another fresh new look at the financial market with the hopes of understanding the behavioral patterns of market participants and using that information to strategically position ourselves for the next move. And I encourage us all to stay tuned in so that we don't miss out on any of the valuable ideas we will be deliberating on today. And so far this week we have been monitoring about 3 assets on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, popularly known as the gold spot. And so far this week we've done fairly well across the assets on our watch list, though we had some particular assets like the USDJPY, which had been in a very choppy market condition throughout the major part of the week. And of course we know why that has happened. Until yesterday we begin to see some traction that finally broke out of that resistant line to make a statement for buyers in that market. So today we are going to be looking at how we intend to position ourselves for the next move. And on the XAUUSD and USOILSPOT, we've done fairly well too as well. And today being the last trading day of the week, it always comes with its own psychological peculiarity, and that has to do with the fact that being the last trading day of the week, market participants are expected to start rounding off their trading activity ahead of the weekend. And this usually comes reflects on the chart in the form of a reversal setup, some of the thing due to the fact that those who are taking advantage of a particular trend during the course of the week may want to be taking some profit off the chart, as we never can tell what could happen during the course of the weekend, and this would reflect on the chart as price action moving in the opposite direction of the proud leading price action. So we are going to be taking all of this into consideration while we review the current market structure. For those of you who are joining us for the first time, I'm very glad to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we are doing on the Forex Morning Mastery? Well, I usually share a couple of videos during the course of the weekend, which of course details what our plans is looking like for the new week. So the Forex Morning Mastery was born out of the necessity to do follow-up details on this particular asset, and on a daily basis as technical traders we usually come here, gather as a community, and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. The session officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, and I encourage you to stay tuned in so you don't miss out on the insights that we will be sharing today. It's also important for you to note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and I encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiment for today. And for those of you who have been with me for a while now, you know how important this exercise is, as these fundamental factors often manifest on the chart in technical patterns. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, of course, needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring this week, we have been focusing on economic features from both the United States and the Japanese economic docket for this week. Now, we'll be looking forward to. And so far this week, we've had some interesting features from both economic calendars. We've had from the Japanese economy, we had the merchandise trade balance, which of course gave us an insight into the balance amount between the imports and exports during the last month in the for Japan, which of course came in at a deficit of 1 trillion Japanese yuan, 1.7 trillion Japanese yen, which was a little bit higher than the expected figure, but much more lower than the previous month. Then we also had some couple of speeches from Fed officials from the United States too as well. And we also had the major event everyone was looking forward to, which was the FOMC minute meeting, which of course provided us with an insight into the decisions made by the Federal Reserve regarding monetary policies, including interest rates as well. Now, this meeting, the major highlight from this meeting was the fact that Fed officials are looking at interest rate kept higher for an extended period of time due to the inflationary status in the United States. And of course, this is expected to support the US dollar and increase the value of the US dollar, which we are yet to see at this particular moment. And I'm of the opinion that we may likely see that huge traction happen today as market participants round off their trading activity ahead of the weekend. Now, on Thursday, we saw the publication of the S&P Global, which revealed the services PMI, composite PMI, and of course the manufacturing PMI from the United States. And of course the figures came in below expectations, as we saw the service PMI coming in at 51.3, below the expected 52, and of course below the previous month 52.5. Then we also saw the manufacturing PMI come a little bit higher than expected at 51.4, giving us a positive deviation of 0.84, which further gives us an insight into how well the manufacturing sector of the United States is doing. So these were the impactful event we looked at for the week, and it, of course, the anticipation of this event resulted in some choppy market conditions, which we saw on the chart. And for today, Friday, February 23rd, we do not have any high impactful event to look out for, and with the absence of no macroeconomic data to look out for, we shall be relying on our technical skills to guide our trading decisions as market participants round off their trading activities for this week. And of course, we are going to be taking into consideration the psychological expectations as regards to rounding off trading activities. We're taking that also into consideration. So with that being said, here we will be diving right into the business. And I can see your comment, Torres Master. Good morning to you. Glad to have you around with us this morning, and trust you are doing very well out there. So the first asset we will be taking on this morning, as usual, is going to be the US Oil Spot. And so far this week, we've done pretty well on this particular asset. In fact, we've had roller coasters of buys, sells, and of course the last 24 hours we saw buying opportunity too as well, which we took advantage of. So for the sake of those who are joining us for the first time, so that you can be on the same page with us, let's run through how trading activity started for us this week and what led to the decisions we made. Now, at the beginning of the week, it was more of price action, trading within a range, as we saw trading activities confined within the 78 and the $77.60 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we identify a range like this, we exercise patience and wait for price action to either break down the support line of that range to give us an opportunity to sell, or break out of the resistance line of the range to give us an opportunity to buy. Now, in addition to the range we identified there, remember we saw price action still floating above an ascending trend line we identified on the higher time frame. Now, coupled with this ascending trend line and the fact that price still remains above the ascending trend line, it made quite a lot of sense for us to look out for buying opportunities at the breakout of the resistance line of that range at the beginning of the week. And of course, I did emphasize that due to the US public holiday, the presidential holiday that happened on Monday, that is likely we will be seeing some subdued trading activity due to low liquidity as a regards to the absence of the US trade 5 pips move, 48 pips move thereabout. Price went into a range, and on Tuesday we begin to notice that the inability of buyers to break through our key level at the $78.50 level was a clear sign that sellers may likely take over this market. And of course, you know how we use our key levels in this community. As long as price remains below the key level, we obviously want to be looking out for patterns and structures that supports the idea of selling that asset. Now, with this understanding in mind, we said the trend line here will play a major role in guiding our trading decisions, and that if price ever breaks down that ascending trend line, we will have no other choice than to get prepared to sell. Now, during our live session on Monday, we already saw price break down the ascending trend line, and we projected that we will be looking at a potential retest of structure to incite an opportunity to sell. So with a sell limit order around the $78 area, we had our first sell position for the week triggered, and since that moment we kept on selling, and I think we had about 3 sell positions running. The third one did not do very well at all, but we had some considerable profits on that one. And then during our live session on Wednesday, we begin to notice that sellers were finding it difficult to continue the momentum, and we just said that if price goes ahead to break back above the $77 area, we will be buying this asset. And one of the structures we said we will be using to guide our trading activity for Wednesday's trading session was this beautifully identified descending trend line. And we agreed that if price action ever breaks out of that descending trend line, it will be a good opportunity for us to buy. So with a buy stop order above the $77 area, we capitalized on our second buy position for the week, and then we kept on adding more positions, had a breakout of the $77.60 and of course the $78 area before we were taken out of that position yesterday. And for the fact that price action still finding higher lows, we added more at the $77.60, $78 area and the $78.50. The third one did not do well, and we saw price we got taken out. Of course, when price action moves significantly well in our direction, we obviously want to be moving our stop losses to secure the current buy position. And of course, by now all buy positions has been taken out at this juncture. Now, with the current situation we have in the market right now, how do we intend to capitalize on the next move as market participants round off their trading activity for this week? Now, since all buy position has been closed, we can say that the current bearish momentum we're noticing here that started during the later part of the New York session yesterday might be as a result of a retracement of that bullish momentum we saw yesterday, in fact in the last 48 hours. Now the question as we head into the last trading day of the week is, how far will this bearish momentum go? Is it going to be a move that will incite a sell-off today, or are we going to be seeing the uptrend continuation happen today? Now remember, yesterday we saw the report from the EIA. Remember, we were looking forward to the Energy Information Administration report as regards to their crude oil inventory for last week, which of course came in at an increased figure of 3.514 million barrels for last week, and the upper week was about 12 million barrels, so the production was lower than the previous month. So the stockpile was lower than the previous month, which is a sign that there might likely be an increased demand, and this resulted in that uptrend move we saw yesterday. Now, as it is right now, the ongoing tensions in the Middle East continues to raise concerns about disruption in crude oil supply from that particular region, which of course is keeping prices supported for now. And based on this, and coupled with the possibilities that the US Federal Reserve and other major central banks are likely going to be maintaining interest rates higher for an extended period of time, this idea could limit the uptrend situation on this asset. So now when we weigh the two options, that is the tensions in the Middle East, reduced stockpile, and of course the potential of keeping interest rate higher for an extended period of time, we should get to understand how the market participants are going to be digesting this information and of course reacting to it. Now, to have an idea into how market participants will be reacting to this information, I was able to identify a simple ascending trend line which we will be using to guide our trading decisions for today. And after connecting the series of higher lows in the last 48-60 hours, you will see that we have this beautiful ascending trend line to work with for today. And you do know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. However, if the trend line is broken to the downside, then we can now start thinking of selling this one. Now, at this point in time, price action still remains above the ascending trend line. So what structures and patterns are we going to be using to guide our decisions going forward? Now, looking at what has been happening here since Wednesday's trading session, we saw a high here, a higher low, a higher high, and how will price react to this ascending trend line around the $77.65 area before making any decisions? Now, if buy pressure resumes around this area, then we shall be looking at the breakout of the $78 level to join an uptrend move, while we will be looking at adding more buy position if price action goes ahead to break out of our key level at the $78.50 level. So this is how we shall be looking out for buying opportunities today. However, if it so happens that price action breaks down the ascending trend line, considering the fact that this area between the $78.50 level and the $78 area had been a strong selling niche since the month of November. For those of you who are with me on Monday when we were analyzing this asset on the higher time frame, you will see that that area has been more or less a strong selling niche in this market, and buyers have been struggling to break out of that area in the last 3 to 4 months. Now, if this continued selling pressure around this area persists, we may likely see price break down that ascending trend line. Now, if price breaks down that ascending trend line, we shall be looking out for selling opportunities below the $77.60 area, which will be a level we shall be using to support the bearish buyers in this particular market. So for today's trading session, our center of focus is basically going to be between the $78 level and the $77.60 area, an area which shares a beautiful confluence with that ascending trend line. And depending on how price, depending on the direction of the breakout, will determine where price is likely going to be closing for this week. So I do encourage us all to mark out these levels on our chart, as we will be needing it as a reference point to guide our independent trading decisions for today. So let's look out for what is going to happen around this area. I'm of the opinion that within the next 2, 3, 4 hours, we should be having an idea of where price is likely going for today. So I encourage us all to mark out this level, as we shall be using it as a reference point to guide our independent trading decisions. So this is my simple view on. Always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And please, if you have found this content helpful and useful so far in making your independent trading decisions, I really appreciate your support by giving the video a thumbs up. This is the cheapest way you can help this channel to grow, and thank you very much as you do so. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at now is the USDJPY, and what a phenomenal 60 hours session we've had here, as we have been buying this asset since Wednesday's trading session, taking advantage of that bullish momentum. And at the moment we have roughly over 90 pips in profit from 1 to 3 buy positions, and in fact we are looking at another trigger at the breakout of the 150.650 level, which I did updated us during our live session, my commentary this morning. Though during the Asian session we saw the Japanese yen attracting some buying activity due to geopolitical risk and concerns about the intervention by the Bank of Japan. Now remember, a couple of days ago we had last week Friday, and I think at the beginning of this week we had policymakers in Japan emphasizing that the Bank of Japan is actually ready to intervene in the market if the Japanese yen continues to reduce in value. And of course this sent a ripple of fear into the market, resulting in some choppy market conditions, which we saw during the first half of the week. As you will see, price action was initially caught within the range of the 150.285, as you will see here, and then it extended further into the 150.450 level and the 149.875 to further emphasize the prevailing uncertainty in the market during the first half of the week. And during our live session yesterday, I think a couple of days ago and yesterday, of course, we begin to notice that despite the emergence of buying activities in favor of the Japanese yen, we saw that as soon as price got into that area around the 149.870, we noticed the inability of sellers to break through and continue that momentum to the downside. In fact, at every point in time sellers tried to break through, we saw how buyers continued to negate all their attempt to follow through. And as a result of this observation, we decided to consider buying this asset as long as price action remains above this temporary demand zone. And during our live session yesterday, we acknowledged this ascending trend line after connecting the series of higher lows, and we did agree here that it's going to be playing a major role in guiding our trading decisions. And as long as price remains above the ascending trend line, we have no business selling this asset. And in fact, this has helped us to maintain the bullish idea on this asset, giving us a minimum of 3 buy positions in profit on this particular asset. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby. Now at this point in time, you know how we do it. When price action has moved significantly well in our favor, we do want to be moving our stop losses to secure the current buy position, just in case any selling pressure comes in at any point in time, so it wouldn't take us out in a loss on this profitable position. And based on this current structure, I'm of the opinion that anywhere below the ascending trend line makes quite a lot of sense to move all stop losses to. So we are looking at below the 150.500 and above the 150.350 area. Move your stop loss within this range, and always remember that we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, based on the various factors behind the scenes, it appears that hopes for a change in Bank of Japan's policy stance is gradually fading in this market, which may limit any further gains in favor of the Japanese yen. Though we are not going to be ignoring the potentials that sellers could come in, but I'm just talking from the perspective of what is likely going on due to the fundamental factors we saw, the economic features from the Bank of Japan, and of course how market participants have reacted to this data. Now, on the other hand, the US dollar is supported by the Federal Reserve's plan to keep interest rate higher for an extended period of time. Now, if we compare these two, and remember, we said here that the Japanese yen is the Japanese economy is technically in recession due to two consecutive contraction in that economy due to the recent GDP data we saw last week. And if we take all these factors into consideration, the idea of an uptrend is looking more reasonable at this particular point in time. But we are not going to be ignoring the fact that the Bank of Japan could intervene anytime. It could be Friday, it could be during the course of the weekend, and of course it could be at the beginning of next week. So we need to balance these dynamics so that we do not get ourselves caught up in the wrong direction. So as it is right now, and based on the overall risk on environment at this point in time, as market participants are willing to take some risk buying in the stock market too as well, we need a balanced view to this. Now, what we are going to be doing right now is to continue to use the levels we've identified on the chart to guide our trading decisions, and for the fact that price action still remains above the ascending trend line, it makes a lot of sense for us to continue buying this asset. So with a buy stop order above the 150.650 area, this is the highest level price action has been for this week. We already have another buy position triggered at this particular point in time. So let's see how far this momentum is going to go. Is it going to go as far as our key level at the 150.800? In fact, if price breaks out of that level, we are definitely adding more buy positions to our existing trade. So the ascending trend line here is supporting the bullish idea. So let's mark it out on our chart. And as long as price remains above the structure, we shall maintain a bullish bias. Now, in as much as we're looking out for buying opportunities in this market, you know how we do it in this community. We want to keep our options as open as possible. Now, like I said earlier, we cannot ignore the potentials that sellers could come in. Of course, you've seen here since the later part of the New York session yesterday, we've seen how the 150.650 level had been a barrier for buyers. Now, if price fails to break through this area, then it means that the bullish momentum is waning or thinning out, and that could incite some selling pressure, especially as market participants round off their trading activity for this week. Now, for us to sell this asset, what is it that we'll see on this chart that will make us convinced that sellers are likely going through? Now, this is simple, especially for those of us who have been with me for a while now. All we want to see is price action slice through both the ascending trend line and maybe the 150.450 to consider selling this particular asset. So this is the only condition that will make us consider selling this asset. So let's see how the market will play out in the next couple of hours, and I will definitely be giving you updates on both my TradingView and Telegram platform. So this is my simple view on this particular asset, as our center of focus for today basically will be between the 150.650 and the 150.450 area, where depending on the direction of the breakout will give us an idea into where price is likely going to be closing for this week. I encourage us all to mark out these levels, as we will be needing them as a reference point to guide our independent trading decisions for today. So I will take the next 5-10 seconds off to see if there are any questions before we move on to the final assets on our watch list. And yet to see your response as regards to my likes. Currently I'm seeing only 4 likes, and we have over 10 people on board. I really appreciate your support. This is the cheapest way you can support this community to grow, and thank you very much as you do so. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the final assets on our watch list. Stay tuned in. Favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal 24 hours we have here, as price action has been finding some series of lower lows and lower highs, and in fact we have a minimum of 3 sell positions running in profit at this particular point in time. And before I go into the details, and due to the possible volatility that could come in this market, we do want to be moving all our stop losses accordingly. And because this is the XAUUSD, we would like to have a wide range of stop loss here. So I will be suggesting that anywhere above the 2024 area seems most appropriate to move all stop losses to. Please remember that we do want to be giving enough breathing space for price action to move around in this particular asset. And in fact, this is what I've been expecting since the beginning of the week. If you are with me since Monday, I was telling you that I was surprised at the bullish momentum on this asset, but we had no choice than to take it because the market structures is saying so. You know, we listen to whatever the market is saying, but from a personal perspective, from my own instincts, it was surprising that price action was rising. And we know why I was surprised. Remember, we talked about the idea of interest rate being kept higher for an extended period of time. We saw the US Treasury bond yield doing very, very well. And you know how the US Treasury bond yield is directly proportional to the US dollar. If the US Treasury bond yield rises, the dollar will follow suit. And if it drops, the dollar too will follow suit. And these two factors here for me was supporting the idea that the gold is likely going to crash. But of course, the continued tensions in the Middle East tempered market optimism, and of course incited the uptrend scenario we have been enjoying since the beginning of the week. Now, for those of us who missed out on our earlier sessions and did not understand what led to buying this asset at the beginning of the week, let's quickly run through what really happened on Monday and what led to the idea of buying this asset. So at the beginning of the week, the first thing we did observe was price action started the week on a strong bullish note, breaking out of that descending trend line we identified on the higher time frame. Remember, we had this descending trend line identified, and then at the beginning of the week we saw how price broke out of that particular structure. Now, in addition to that was the fact that price action remained trading above the ascending trend lines we identified here since last week Wednesday's trading session to further emphasize the strength of the buyers. Now, since we missed out on that bullish momentum that started the week, we decided to position ourselves at a retracement bottom. Now, to position ourselves, potential movement into anywhere between the 2015 and the 2010 area, which shares a confluence with a retest of the descending trend line that was broken to incite another wave of bullish momentum. Now, with a buy limit around the 2015 and the 2010 area, we saw the one at the 2015 triggered, and since that moment we have been buying the XAUUSD. Now, in the last 3 days or so, we saw the market go through a choppy market condition as price action remained confined within the 2032 and the 2023 area to emphasize the prevailing uncertainty that gripped the market at that particular point in time. Now, with the situation we had here, we begin to suspect that buyers are already losing that momentum, as you will see at every point in time price comes into that area between the 2032 and the $2028 level. We saw selling pressure resume from that particular area, which of course is in alignment with my thought process as regards to what is expected to happen on the XAUUSD for this week, that is price dropping to the downside. Now, with that situation in mind, during our live session yesterday, we were looking at price breaking down this ascending trend line to give us an opportunity to sell. So with this understanding, we had ourselves positioned right below the $2028 area to capitalize on this bearish move, and with another opportunity below the 2023 and of course the $2020 area and the $2015 level, we were looking out for more opportunities to sell. Now, as it is right now, we have a minimum of 3 sell positions running in profit, dovetailing to about let's see, we have about 90 pips on the first sell position, second sell position running with about 40 pips, that's 100 pips, and while the third position isn't doing very well at the moment, about 10 pips thereabout. And like I told you earlier, kindly move your stop losses, secure this current sell position, as we may likely see some volatility happen today. Now at this juncture, the market is now optimistic that the Federal Reserve will keep interest rate higher for an extended period of time due to the ongoing inflation and resilient US economy. And this of course was further supported by the recent comments from the Fed official speeches that happened during the course of the week. Now, like I said earlier, the US Treasury bond yields continues to wax stronger and of course is weakening the prices of gold at this point in time. And the risk on sentiment in the market too, of course, is likely going to be affecting the gold asset too, as well, as market participants are willing to buy the stock market too at this point. Now, with the situation we have here, I'm of the opinion that price action will continue to drop to the downside in favor of the US dollar. Now, this morning, while I was dropping my commentary for you all on my TradingView and Telegram platform, I did identify this area. In fact, in the last 48, 96, 90 hours, we saw how this area had been a strong barrier for sellers in this market. As you will see, in the last 2 days, we saw that every attempt by the sellers to break through was met with strong resistance from the buyers, as you will see here on Wednesday. The same thing also happened here yesterday. Now, as it is right now, price appears to have broken down that structure to further emphasize the strength of the sellers. And if price continues to trade below the 2023 and the 2020 area, I will feel more confident in my sell positions. And if price goes ahead to break down the 2015 right here, we shall be adding more sell positions to our existing trade. So at this point in time, considering the fact that price remains below that ascending trend line and of course has broken down the temporary demand zone between the 2021 and 2020 area, we hold on to this bearish bias. And to further make things easier for us to feel confident in this sell position, let's acknowledge the series of lower highs in the last 24 hours. And if we do that correctly, we should be having a descending trend line like this. And you know how we treat our descending trend lines. As long as price action remains below this descending trend line, we shall feel comfortable in the sell position. So even if we see buyers coming at any point in time, we should be seeing this trend line as a barrier for buyers for the pushing price to the downside. So as long as price remains below the descending trend line, we shall continue to feel comfortable in our buy positions. Now, in as much as sell positions. Now, in as much as we are in a sell position at this juncture, and that We know how we do it in this community. We always want to keep tabs with the opposite direction too as well. Now, if we are going to be considering the bullish potential in this market, especially after observing this temporary demand zone between the 2021 and $2020 area, the question now is, this breakdown here, is it going to be a true breakdown or a false breakdown? Now, if it's going to be a true breakdown, we obviously want to see price trading below that. But if it turns out to be a false breakdown, then a breach of this descending trend line will definitely change our bias from bearish to bullish. Now, what this simply means is that if price action breaks out of the descending trend line, look at how beautifully the descending trend line shares a confluence with that level at the $2023 area. Now, if price breaks out of this descending trend line, we shall be looking out for buying opportunities. Now, there are two ways to which we can capitalize on trading around this area, depending on where you are with us. Now, I usually emphasize this in my previous sessions, but for those who are joining us for the first time, let me take you through what I mean. Now, for those of us who have been profitable on this asset for this week, that is, if you're profitable, you've been part of the profitable journey, you can afford to leverage on some of the profits you had made so far this week by risking placing a buy stop order above both the descending trend line and the $2023 area to see if that's breakout is going to work. Now, if it doesn't work, we know that we are only risking some of the profits we had made so far this week. However, if you are new with us and you're yet to be profitable on this asset, so you don't have any leverage to bank on, so what you want to be doing is exercise patience and wait for a retest of structure on the lower time frame, let's say the 15 minutes time frame to be precise, to incite another opportunity to buy. So this is what we are going to be looking at, and for today you can see how crucial this descending trend line is going to be for us today. So it's important we mark out these levels on our chart so that we are going to be using it as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD. So let's see how the market is going to play out today. I encourage you to mark out that trend line. It's a very, very important factor in deciding what we are going to be doing today. So if price remains below the descending trend line, we remain bearish, and if price breaks out of that descending trend line at the $2023 zone, we will be getting ready to buy this asset. And of course, if you are going to be with us during the XAUUSD live window later today, you will see how we will be monitoring real-time trading real-time on the XAUUSD. So I already dropped the link to the XAUUSD live window right in the comment section of this video. It's pinned at the top, so you want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. Now, for those who don't know what the XAUUSD live window is all about, well, this is a platform where we come together to monitor real-time price action on the XAUUSD, especially during the New York session, and last about 5 to 7 hours depending on the volume of trading for that particular day, guys, during the XAUUSD live window. I hope I made myself very clear on this particular asset, but if you have any questions or need some further clarifications, feel free to let me know in the comment section. And I'm yet to see your response as regards to my likes. We have over we only have 4 likes already. Please, if you are yet to like the video, please support the channel by giving the video a thumbs up, and this one way you can actually help this community to grow, and thank you very much as you do so. So I will be taking the next 5 to 10 seconds off to see if there are any questions before we round off on today's Forex Morning Mastery session. I see your comment. Hi TK, good morning to you. ITK, trust you are doing very well. It's been a while since I heard from you. How are you doing today? All right, I see your question here. You said, how do I join your other groups? Please, Telegram, Trading View. Of course, yes. If you look at the bottom of your screen right now, you will see some wording scrolling at the bottom of your screen. It includes all the contact details as regards to my Telegram channel, my Trading View, and of course my email contact as are well displayed there, so you can check them out and write it down. And if you can see clearly, you can go into the description box below. I have all these details duly highlighted there. All right, so I look forward to seeing you on my channels. Thank you very much, ITK, and I wish you a wonderful weekend. CIS, oh, I'm very grateful. You're welcome, and thanks for the compliments. All right, so in the absence of no further questions, I think we have come to the end of today's Forex Morning Mastery session. And in fact, it has been a wonderful moment with you guys. I really appreciate and enjoyed every single moment I had with you guys. And I do hope today's session was quite useful in helping you make your independent trading decisions. And so far today, we were able to attend to the 3 assets on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups that we are going to be using to strategically position ourselves for the next move. And I do hope you marked out these levels accordingly. If you have done so, well done and kudos to you. All we just need to do now is exercise patience and allow the structures to mature. And for those of you joining us for the first time, I do hope you had a wonderful moment here, and I do hope you also gained 1 or 2 things from what we deliberated on today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing you same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for the new week. And if you are yet to subscribe to this channel, if you had not done so, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. So in preparation for next week, I will be dropping some couple of videos giving you an insight into what we will be looking at for next week. And in fact, I will be considering the JPY/USD this time around, as the USDJPY is getting too choppy for my liking. So let's see what happens anyways. Let's see how the week closes, and if it happens that the JPY/USD will be the best option, you will see that video during the course of the weekend. So click on the notify me button, click on the subscribe button so that you don't miss out on that particular video, as it's going to be a foundation for our first Forex Morning Mastery for the new week. So it's on this note I want to wish us all the best of luck. I wish you best of luck. I wish you a wonderful weekend, and trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.